Good morning, and welcome to Building a Business Case for Paperless Treasury. My name is Dave Robertson. I'm a partner with Treasury Strategies, and I'm joined by Joe Pizzo from WASA. So today we're going to discuss why go paperless in Treasury. And historically, Treasury management onboarding has been a complex, time-intensive, and paper-intensive operation for banks and customers. Without a paperless electronic onboarding solution, banks are missing opportunities to accelerate revenue, cut costs, and alleviate some of their compliance pains. And by going to a paperless process, it generates significant efficiencies, and it also enables banks to focus on what really matters, the customers. So I'd like to begin by introducing our speakers today. I am a partner with Treasury Strategies, and I'm going to be bringing two perspectives to this webinar. The first is that we have a corporate practice, and in our corporate practice, Treasury Strategies is consulting to the CFO chain of command. We're helping companies with their payment operations, their liquidity, their cash management, and also in bank selection. And so we're seeing firsthand the pain that corporations go through when it's time to switch banks or add additional services with a bank. We also see what happens when it works very well, and it deepens the rapport and partnership between the banks and their corporations. The second perspective I'm going to bring is from our financial services practice, where we're consulting to the leading global and regional banks on a variety of issues, including their implementation capabilities. And I'd have to say one of the key trends we've seen that we'll get into a little bit is that banks are really focusing on the customer experience, making things easier, more advisory, more integrated with their clients. And nowhere has that been more critical than in the onboarding and implementation space. And we've been doing significant work in helping banks transform their implementation processes, capabilities, and tools. And we'll be sharing perspectives from that, along with some survey results from some work that we did with WASA as they were developing their solution for the banking industry. I'd also like to introduce Joe Pizzo. So you can see that among the two of us, Joe is the friendly, good-looking one. And Joe is a vice president and head of Paperless Enterprise Solutions at WASA. He's been with WASA for 12 years, and he was instrumental in launching the preliminary pieces of WASA's paperless solution. And that solution was showcased by BAI as one of their Innovation Moment solutions. So today we're going to go through what is paperless treasury. We're going to share some recent survey insights, and then we're going to talk about the investment paybacks. What's the impact of paperless treasury on customer experience, accelerating revenue, reducing costs and efficiency, and ensuring compliance? And then Joe is actually going to share some case studies of some of the institutions that have worked with WASA to deploy their paperless solution, and he'll share firsthand how they've done that and the benefits of the solution that they've received. And then we'll close with how to get started. And throughout, if you have questions, we would suggest that you type them in, and time permitting at the end, we'll go through as many questions as we have. We could also follow up one-on-one if you leave your contact information in the questions. So I'd like to begin with some key trends in Treasury. And one of these I already highlighted, which is the trend towards simplification. One thing that sort of has characterized the banking industry historically, and it's not a good thing, is that there's probably no other industry where we've historically forced our customers to learn our business. And what I mean by that is we've not really oriented our solutions, how we sell, how we onboard to the customer, but instead we forced them to become experts in banking. And what we're seeing is that there is a huge effort underway to make things easier for our customers. Our corporate customers are facing more challenges than ever. They have to do more with less. And the easier, the more simply we can deliver things, the more intuitive, the more we can orient our bank to the customer, the better that's going to be. So that's the first key trend we see, is reorienting the bank to the customer, making things simpler, more advisory, more personal to the customer. And you can see our little gauge here, the red unhappy face all the way to the green happy face. And the goal of this webinar is to help each of us get to the happy place, and that is an outstanding customer experience. It used to be 15 years ago, if you were trying to win a customer, they would take a back office operations tour, see your factory, learn all about your wonderful capabilities. Now we're seeing customers choosing their banks as much based on the experience, more so than just the pure functionality. And in fact, functionality is becoming somewhat of a given for most of the services, and the real differentiation is, how do I make those services work for you? How do I integrate them and configure them into your operation? And that's as much about the implementation process as it is about the sales process and the functionality. We're also seeing corporations single-mindedly focused on the goal. That might be maximizing their liquidity, it might be managing financial risk, it might be accelerating funds movement. And what they want is, they don't just want products, they want solutions. They want solutions that are tailored and configured to their specific objective. All of this is challenging enough, but in the lower right-hand quadrant, what we're facing is just a plethora of compliance, regulation, and new guidelines. KYC, for example. And many times we've seen banks optimize one component of the implementation spectrum, but then their KYC process is still confusing, manual, and difficult for clients. So holistically, there's no way to escape it. We've got to move into the new world of massive intrusive regulations and orchestrate a process that is still simple, expedient, transparent for our clients. WASA engaged Treasury strategies to help them understand from a corporate perspective, where are the opportunities to improve the implementation and onboarding, and from a bank perspective, where do banks see their opportunities and needs. And what we did is we went out and we surveyed corporations, and we also surveyed global and regional banks. We're going to share some of that. There's a full report that's more detailed, but we're just going to hit some highlights. Fascinating on the corporate side. We expected there to be a very significant focus on implementation, but it was far more profound than we thought. 80% said implementation is a significant component of their sales decision. So if you're a bank and you're not conveying a good implementation process, 80% of the prospects out there are probably not going to select you as their provider. So it's a key selection point, yet 45% said that a recurring pain point for them was lengthy implementation. Over 2/3 said that they would switch banks for a better onboarding experience. 75% would love to see an alternative to paper-based implementations. They want to get rid of the paper. And 2/3 are dissatisfied with their bank's current process. So in terms of a call to action, your clients are speaking. They don't like the way things are being done currently. They want it faster. They want it more virtual. They want it more transparent. Now, the banks have been listening. 90% recognize that they can accelerate revenue by making implementation faster. And moreover, it's not just accelerating revenue, but we all know what happens with a lengthy implementation. Every day that goes on, it becomes less likely that your client's going to give you the full wallet that they promised. So what you end up is not only delayed revenues, but you don't even get the wallet that you want in the first place because the client just gets fatigued and they just leave their business in place. Shockingly, 1 to 3% of documents are lost during the implementation process. That doesn't sound like much, 1 to 3%, but we're talking at a large bank, literally tens of thousands of documents. So just think of all this paper moving around and think about all the errors. Moreover, it's not as if you're going to the client and say, hey, could you fill out this document again? But already in many of these processes, you might be asking for the same information 10 times. So imagine how frustrating it is for a client. They've given you a piece of information for the 7th time, and then you come back to them and you say, you know what, we're not sure we got that accurately. Can you give us that information again? And lastly, everyone's looking for execution excellence. And by moving to a more digital environment, a paperless treasury implementation, that's going to reduce the audit and validation efforts by nearly 80%. So the survey findings did underscore that this is a major area to deliver value, to win more clients, to increase revenue, and to improve efficiency and risk and control. Okay, at this point, we are going to go to a survey question. And we'd like to just sort of follow up on this and ask those of you on the phone, when you are going through your service implementation process, Which of these pain points do you think your corporate customers would say they experience the most often? An implementation process that's too lengthy, redundant requests for information, lack of transparency, lack of a clear view into implementation, too much paper, too many paper-based forms, or just overall poor communication. So we'll take a moment to let people vote. And for those of you that are corporates on the webinar, you can simply vote on which of these pain points are most relevant for you. Okay, we'll just give it another couple seconds here. Okay, great. All right, we're ending the poll and we're going to tabulate the results. And this will be interesting because we're going to lead into our survey, and that will tell us how similar the webinar audience is to the survey that we conducted. And just by way of background, we have 340 participants on this webinar. So I think that underscores how important this topic is to both corporates and to banks. All right. So we have a winner, or I don't know if we should call these winners or losers. The two most frequently cited pain points are lengthy implementations and too much paper. Obviously, lengthy implementations, there's more things that can go wrong, more revenue that can be lost or delayed. And the paper-based process, if you think about it, anytime there's paper involved, that adds time, it adds potential for error, it makes it more difficult to access data. And you can see probably the least critical pain point was poor communication. And I think that's interesting because I think today what we're seeing with our banks is that the underlying process has problems, it's too manual, and what we see often is banks are throwing people at it, and the people are interfacing between the client and the bank, and they are really trying to manage communication. So even though implementation is an area with a lot of improvement, we do see banks doing things in the short term to try to mitigate some of that risk. Okay, we're going to move on, and I'm going to hit some survey results pretty quickly. The first is just kind of a ranking of pain points, and we broke this out by large companies versus small companies. And you can see this actually tracks pretty well with our results here. Too much paper, a lack of transparency, lack of clear view into implementation, too lengthy of an implementation process. And I think what's interesting here is that the lack of transparency was really a critical issue for the large companies. And that makes sense because they have complex needs, they've got a lot going on, they may have multiple divisions involved in the implementation, and it's particularly critical for them to be able to see what's going on with the implementation, what's the next step, what's the role, because they have complex organizations within their own company. Okay. The second survey question we're going to cover here is the impact on the purchasing decision by companies. And literally the question is, when selecting a treasury management service provider, what impact does their implementation process have on your buying decision? And we broke that out into large and small. And what you can see is that the largest firms, it has a huge impact. The smaller firms, it has a very large impact. And for the smaller firms, it's actually been slightly more critical in their subsequent purchases from the bank. And we do see this often where I might buy my first product from you or a base set of products. If that implementation process doesn't go well and it's time for me to add more services, I may not go back to you if you've put me through hell just to get up and running with the services. And if you think about it, that can be critical for very rich verticals like property management, financially intensive companies. Some of the most fee-rich entities or deposit-rich entities, implementation is actually more critical to them just because of the velocity the account opens that they go through. Now we're going to shift to the section of the survey that dealt with the bank pain points. And we're looking at where banks experience their pain points. And I guess a couple things. One is the pain points are sort of across the board, but they're actually much more severe for the small banks. And I think this is somewhat of a life cycle issue where the small banks maybe have not had as much investment in their implementation processes. Although I will say in my experience that when the large banks get it wrong, they get it really wrong. They often have a lot more challenges in coordinating, and anytime there's a paper-based process at a large company, just the potential for error given the complexity of their organization is just magnified versus a small bank. But you can see here that the real key pain points here are paper, keying errors, missing documentation, and then delays caused by poor internal communication. So there are pervasive issues here. The largest banks are really having pain from delays caused by paper, and the smallest banks are having pain based on delays and also missing documentation. Okay, we're going to go to a second polling question. And that question is, do you, as a bank, see opportunity to accelerate your revenue by shortening your implementation cycle time? So yes, we can accelerate implementation and generate more revenue, or no, we've already optimized our implementation process and there's no further revenue to be gained. So we'll just take a minute here to tabulate the results. And this is a yes/no question, so we're gonna go ahead and close the poll. Hopefully it didn't take too long to think about that question. And what we'll do is we'll share the results, and then we're also going to show you what we found in our survey of the banks. Okay, so if you bear with us for a moment, we're tabulating the results. All right, so 7% of us are on the beach. We're sitting with a cocktail. The money's coming in, and our work is done. And the rest of us, the 93%, we got to go to work and make things better. So I'm not sure if the 7% are going to like drop off the webinar at this point, but obviously there's more things to do than just accelerate implementation. But for the 7%, if you're there, great job. And for the 93%, we feel your pain. And it's a pain that the good news is anything you invest in the implementation process that shortens the time is going to have a very nice business case impact. That's going to help you get funding for capital, for temporary resources, even consulting services. Okay, so when we asked this question in the survey, and we also asked about the business impact of improving implementation to free up the sales force, we found some interesting things. First of all, the large banks all said there's a huge opportunity to accelerate revenue, and the majority of the small banks said as well. We saw a little bit more of a split in terms of freeing up sales, and this one is interesting to me. The answer is overwhelmingly yes, but it wasn't as overwhelming as I would think. One thing that we definitely see in our consulting work, both on the corporate and on the financial services side, is that we see that anytime something goes wrong with implementation, sales has to run interference. And even as you go down market, it might even be the relationship manager. They're getting pulled in with client complaints. They're having to follow up with implementation. And so this is a huge business case impact that oftentimes cannot be that visible. Literally, you may have, we've seen sales forces where up to 20% of the time of the Treasury sales officer is spent either engaged in implementation or in some ways getting involved in and coordinating, following up on implementation. So that doesn't always pop to the top of the business case, but that can be a major, major opportunity to improve revenue growth. Okay, so at this stage, we want to cover a couple potential bank responses. And this is a little bit of a loaded slide because there's, one that we're recommending. One thing you can do, obviously, is do nothing and suffer the consequences. It's just too hard. It's too complicated. We don't have the resources, and that's our crying baby there. So nothing's happening, and pain is occurring in the universe. Not a good thing. The upper right, this is a mistake that we see banks make, which is that we see banks just focus on one or two weaknesses, and they don't really fundamentally address it. And what I'd like to just have you reflect on is the nature of implementation. It is a complex activity. It is interconnected and involves process, policy, controls, governance, roles and competencies, metrics. So it really does need to be tackled holistically. You can clearly break it into an overall roadmap and chunk it out, but many times we see banks just tackle one element of it, and typically that leads to failure because you're not holistically addressing the issue. So on the bottom is kind of what we're suggesting, and that is basically transforming, taking all this complexity and orchestrating it on behalf of the client and internal constituents so that it's a logical, transparent, efficient process with appropriate controls. Each stage of the process has a timestamp. There's expectations, there's intelligent routing, there's clear roles and skill sets and tools around the implementation. And what we're really talking about is turning lemons into lemonades, taking the problems and actually making it a strength. And we're seeing banks that are good at implementation, they're winning more business, they're retaining more business because they've taken this work and they've undertaken it to make things simpler, easier, more advisory for the client. So before we get into Joe's section of the presentation, which is going to go through some case studies and a little bit more detail on the solution, I wanted to talk about the investment paybacks that Treasury Strategies has seen with its clients. You know, and it's interesting because different things are in vogue at different times within banking. Sometimes banks are very focused on cost savings. Sometimes they're focused on retention and satisfaction. Sometimes they're focused on revenue. The good thing about implementation is that it is a very powerful component of your business, so the business case has many legs. First off, there are cost savings. Right now, this is a people and paper-intensive process. That means a lot of cost, a lot of variable cost. What we've seen when clients have transformed implementation is a very significant reduction in workforce through automation and through streamlining of the process. We've seen typically that a bank can reduce up to 50% of their staff. I do want to caution you, though, that the cost savings don't translate to 50%. And the reason for that is that what you're really eliminating are the lowest value roles. And this is similar to what many of you have seen with your customer service units. As you've automated customer service, the remaining service people sort of become your super service people. They're more architects, they're more advisory. They almost look like a salesperson, a very technical salesperson who is skilled at configuring your solutions to the client environment and doing problem solving. And how great is that? I mean, think about it. What if you looked at your implementation team and instead of mechanically moving paper around, they were actually adding value to their clients? That's what we're looking for, and it's accompanied by a very material cost save. Time to revenue, a huge win. Essentially, you're taking all that future revenue and you're shifting it up. You know, even if you just shifted up 5 business days out of a year, that's a 4% lift on your revenue growth rate. Retention. We see sort of a barbell in attrition at Treasury Strategies, and we measure attrition at the product level. So your customer may not leave, but they may move business away from you. And we sort of see this barbell where there's a lot of attrition in the first 2 years of winning business, and then it sort of stabilizes. Why do you lose business in the first 2 years? The client didn't get the solution they were thinking they were going to get. They didn't have a good experience. And many times we quite frankly see an incomplete sale. The solution has not been configured into the client environment in a way that they can get value out of it. A great implementation process ensures that your client is getting the most value out of your solution. Wallet share. If I'm going to cross-sell my client, I need to make sure that they think of me when it's time to add services. I need to be a bank they want to do business with. You know, I've dealt with corporate clients before where they literally dread having to open a bank account. How great would it be if your client actually was excited? Wow, I'm going to open an account and I know this bank is going to do it in a great way. It's going to be transparent, it's going to be fast, and it's going to be relatively painless. And all of this translates to profit. The business case, you'll generate reduced costs, faster revenue, reduced cost of sale, and greater sales efficiency. And to be honest, we generally see a business case that's about 50-50 cost and revenue. with a lot of the revenue coming from freeing up the sales personnel to have more time to be proactively selling versus running fire drills to support implementation. Okay. So at this point, what I'd like to do is turn over to Joe, and Joe is going to share some of the firsthand experience that WASA has had in transforming the implementation process at banks and the benefit those banks have received in moving to a paperless treasury onboarding.
Thank you very much, Dave. Some great information there, and I hope to expand that and give everybody some insight into what we're doing with our clients and customers that we're doing consulting for today. On the next slide, I'd like to give you a brief overview of WASA. Here at WASA, our mission is to be a catalyst for results by delivering the best financial technology solutions. We enable our clients to drive new revenue, improve the customer experience, reduce cost, and manage their risks. Our solutions are focused on being best of breed, and many of you probably know us for our integrated receivable solutions which accelerate your cash flow and provide you with information to make business decisions. Or you might know us for our remote capture solutions for accelerating your deposits. Our third area of focus, paperless, complements both of these by improving the onboarding process so you can generate revenue faster with these and other services. Quickly on the next slide, I want to mention our market leadership. WASA is the #1 solution provider of retail and wholesale lockbox platforms. We currently have more than 150,000 RDC seats deployed and are processing more than 400 million annual transactions in our outsourcing operations. We service 9 of the top 10 U.S. banks, more than 70% of the telecommunications market, and some of the largest utilities, insurers, and government agencies in the U.S. Let's talk about what paperless treasury actually is on the next slide. For us, a paperless treasury solution is more than just a single product. A true paperless treasury solution is the combination of refined business processes enabled by technology to meet the requirements of all the stakeholders involved in the onboarding process. From the first interaction between the customer and the treasury sales officer to the generation of billing statements in finance, paperless treasury connects the stakeholders with each of the underlying systems. Whether it's sales accessing CRM, the customer receiving notifications through the business banking portal, or the operations team coordinating setup requirements with their outsourcing partner, everyone involved can benefit from improved visibility, efficiency, and quality throughout the process. So on the next slide, let's dive into the paperless treasury business case. Building a case for paperless treasury may include numerous factors, depending on your current environment. As our business analysts here at WASA have worked with financial institutions of all different sizes and focuses, we have seen many different combinations of treasury products offered, core solutions, enterprise content management, and workflow solutions. The primary factors to consider within your business case, regardless of your environment, are: how can you improve your customer experience to make it easier to do business with you? What processes can be streamlined and what related costs can be removed? How can these efficiencies help you accelerate your revenue, bringing on more business without increasing headcount, or both? As well as how difficult is it to show your teams follow your documented processes and report on an individual client level? If you are like every institution we have worked with, you will be able to start building your case when you dig into each of these individual areas, and that will translate into hard dollar savings as well as accelerated revenue. If we move to the next slide, you'll see an image that actually is probably familiar to quite a few of you. I've worked with a number of clients over the last few years talking about how they can improve the overall onboarding process. Almost without exception, when talking to the sales team and taking it one step further, meeting directly with their customers, one of the first issues everyone mentions is the sheer amount of documentation that has to be completed. Earlier this year, I met with a sales officer who shared a story about onboarding one of his largest customers. After he had done a great job in consulting with his customer and selling almost everything in the product portfolio, it came time to execute the agreements for all of these products. He took the folder of agreements out of his briefcase and started to lay them out on the boardroom table, each marked with a sticky note with the appropriate page and location of each signature. All of the agreements ended up covering their entire boardroom table. Is that really the relationship experience you want your clients to experience as they begin this new partnership? So let's dig into that customer experience on the next slide. So what can you do to improve your customers' experience and make them happy to sign up for additional services? Make sure you are respectful of their time. There's a tremendous amount of information required for some of your complex services like Lockbox. Make sure you make all of the data collection process as easy as you can. Electronic forms with built-in validation and instructions to walk your customers as well as your sales team through the process will not only improve the experience, but get it through the process much quicker. Eliminate the guessing game and the need to fill out information like company name, contact information on every form along the way. Allow your customers to self-educate through self-service options, making it easy to find out information about particular service by viewing a brochure or watching a video during the onboarding experience. That can be a tremendous sales tool as well as improve the experience for your customer. Give your customers multiple channels to interact with you and provide them updates throughout the onboarding process. That also includes the signing process for each of the agreements that are generated. Allowing face-to-face, mobile, and online signing channels can go a long way to get things done quicker with your customer as well as keeping them happy. Paperless Treasury solutions can provide automated notifications to both customers and internal resources, as well as portal capabilities to allow self-service visibility into the process at their convenience. Our survey results show that corporates believe that there is room for improvement, and the majority would actually switch to a new institution if they knew the onboarding experience would be less painful as they chose to add new services. This certainly gains visibility with many of the institutions we have worked with that have recently added new roles within their management teams focused on improving customer experience. Now let's dive into accelerating new client revenue. On the next slide, the factors that can improve your customer experience can also directly affect your revenue recognition. Within our bank respondents, the most common pain point and delay was due to the use of paper throughout the onboarding process. In many cases, we have found while working with our customers that data captured electronically resorts to paper due to the use of disparate systems and multiple handoffs, which ultimately result in poor communication or lack of information. Automating manual time-consuming processes like notifying customers of status updates through phone calls or emails can help identify issues and correct them before they become delays. Self-service options begin the onboarding process, and add new services or make modifications can not only help lighten the load of your sales team, reducing that interference that Dave mentioned, it can also get all of the required information to your operations team quickly to reduce the overall implementation timeline. On the next slide, let's talk about what that can actually mean for revenue acceleration impact. 90% of the institutions who took part in our survey believe they can accelerate their revenue by improving the onboarding process as well as increase their sales. One customer was able to reduce their onboarding time frame by an average of 2 days per product. To bring that into real numbers with a solid RDC sales approach, we are seeing regional banks add 100 clients a month. If the current implementation timeline of 7 days is reduced by 2 days, there is a potential for the acceleration of that revenue by 30%, as well as the potential to add 30% new business without adding headcount. Just for RDC, that could be a revenue increase of almost $20,000. If that acceleration is applied to all of the products, that could be over $500,000 a year without increasing your expenses at all. Now let's talk about reducing cost and improving efficiency. Allowing data to flow from your CRM solution into the onboarding documentation, both agreements and setup forms can be a tremendous time saver for your sales officers, not to mention peace of mind that the risk of miskeying information is reduced, which later has the negative effect of causing costly delays. Keep your sales team focused on selling and away from administrative responsibilities. When paper is the only source of information, users tend to make copies of that before handing it off to the next user in the process flow. Leveraging electronic signature solutions and workflow for electronic routing can eliminate this costly user tendency. It can also eliminate the time-consuming tasks of scanning and indexing that typically take place at the very end of the onboarding process. There are a tremendous amount of manual tasks with these complex onboarding processes. All of them can benefit from business rules engines to identify exceptions and ensure your subject matter experts on the operations team are focused on the clients that they have all the correct information for them to complete their implementation responsibilities, as well as kick out exceptions to the appropriate approvers based on those predefined rules you've set aside for your risk and approval processes. Every customer I have met with to review reporting needs ultimately has a spreadsheet, or 10, that requires hours of work to update, yet they are out of date before they are actually sent to the users who rely on them to make business decisions. One institution that we worked with had an FTE that spent more than half a day just gathering exceptions and status updates from their sales team to update their daily reports. This exercise not only required a tremendous amount of manual effort and was very time-consuming, but it also created unnecessary follow-ups on exceptions that were cleared before the reports were actually viewed. That automated feedback loop that keeps your customers up to date also applies to all of your internal teams as well. Get them focused on the right exceptions and weed out the monotonous work. On the next slide, we'll take a look at what that really means in terms of efficiency savings. So what is the true financial impact? We have seen more than a 25% reduction in sales and customer data entry activities. This isn't reducing the time it takes to enter your company information or your contact information on each one of the setup forms as well as each one of the agreements. Those time-consuming processes and activities often require research and can be reduced by up to 80%. Paper reduction is often also reduced by 80% initially, and as the culture shifts from paper to electronic solutions, that will actually continue to increase. The manual tasks like prepping documents, delivering them, making sure all of them are returned with all required signatures and reporting exceptions can easily be reduced by 50% or more. You should also consider the ongoing maintenance required for your services, both customer and regulation driven, that may require additional reporting requirements as well as new agreements to be executed. For one institution we have worked with, this added up to an estimated $212,000 of annual savings, as well as the ability to add 50% more business without increasing their operations headcount. Now let's talk about enhancing compliance. It can be tough to put a number in a business case to represent compliance, but there are numerous direct impacts. Paperless Treasury is not a compliance solution. It is a solution that helps ensure that you are managing your processes to meet your compliance requirements. For example, making sure you are consistently validating the correct information, collecting the right documentation, following the correct processes, and gaining the correct approvals. Due to the sheer amount of paper that is generated during Treasury onboarding processes, a document or even a single page of a document is bound to be lost. On average, there is more than 3% of these documents lost. In some cases, these do not have to be replaced. However, when they do need to be replaced, it costs more than $120 per document. That risk is virtually eliminated by leveraging electronic signing and workflow processes as part of your Paperless Treasury solution. Since everything is captured electronically within a good Paperless Treasury solution, there will be extensive audit logging, making it easy to provide auditors with the information they need with minimal effort. We have many institutions who leverage some of the same customer portal capabilities to provide access to their external auditors. All of these factors can add up to significant time savings before and after your audit activities. Next, let's talk about some of the lessons learned. So, all of this sounds good, right? It's a no-brainer to move forward with a paperless treasury implementation. If that was the case, everyone would be doing it, right? And we wouldn't have only 7% that are out drinking cocktails. Well, we have been implementing solutions to streamline the onboarding process for new accounts, lending, wealth management, and services for our corporate clients for many years. Automating the treasury processes has many of the same obstacles as those other processes. First and foremost, make sure that you get all of your stakeholders together to define the problems. Stakeholders need to review the current major pain points everyone points to first, the documents. The documents you generate, both the setup forms as well as the agreements your clients are executing, to make sure that everyone is on the same page. Each of these documents have a purpose. We have seen setup forms turned into agreements, which turn good processes into bad fast. Do not be afraid to change your current agreements or move forward with a master agreement. Talk to your vendors. Many may accept electronic setup files to eliminate taking that setup information that you're capturing and re-entering it into their Word or PDF templates or into an online portal. In many cases, this could benefit them as well. Also, going paperless is a culture shift. Automating everything day one is a mistake. This shift needs to be completed in phases, and many times the largest bang for your investment is in the first 50% of that automation. The benefits tend to diminish as automation increases and can have an adverse effect by adding complexity through further automation. Finally, paperless solutions should complement your existing infrastructure. You should not have to rip and replace systems to gain these efficiencies. However, make sure that you are choosing the right solution set for the task at hand. There are some extremely robust solutions on the market that can be developed to meet any need. However, you have to take into account, can you afford it? Or if it's going to take multiple years to implement, it's probably not the right fit for you. Also, don't forget how frequently your forms and processes change for a treasury solution. Make sure your internal teams can manage those changes with the selected tools. Finally, let's talk about how to get started. After seeing all the facts that go into the business case, here are a quick view of starting your paperless treasury initiative. First, start by getting some outside help. Whether it's a vendor or partner, a consultant, or a colleague, start by talking with someone who has been successful automating the treasury onboarding process. Talk to your stakeholders, as I just mentioned, both internal and external, to identify all of your pain points. This same group can help you identify the target state and success criteria. Don't be afraid to add wish list items. They may not be as complex or expensive as you may think. And make sure you involve your compliance teams early on in the process. A process that sounds great on paper may have to put on the brakes very quickly if they're not involved. Review the solutions you have in place today. Identify gaps and opportunities to expand, but remember to use the right tool for the job. Develop a plan and make sure you do not try to do everything at once. A good plan has clearly defined milestones and triggers to avoid failure. There will be a second phase. Make sure you account for it up front. As your processes become more efficient, your requirements will change in ways that you could not have accounted for at the beginning of this initiative. Finally, leverage all of your tools to ensure your customers understand the impact to them and get feedback from them throughout the evolution of your initiative. Next, if you need a hand getting started, WASA can help you with your business case. We have multiple tools to help, and you can contact us to understand how the framework that we've discussed today can apply to your institution. Next slide. If you have questions, or for more information about the WASA Paperless Treasury solution, or to schedule an appointment with WASA during AFP in November, please contact John Gustafson at the contact information shown on the slide. And with that, we'd like to finish up with just a couple ending poll questions. So first, would you be interested in taking the survey discussed in the webinar to see how your Treasury onboarding stacks up against the competition? And the second question, would you like to be contacted by WASA for more information on developing a paperless treasury strategy for your Treasury management department?